high dividend stocks in Bursa Malaysia for 2024. 2 high dividend stocks a week invites passive income inside, sends active income away. These stable dividend stocks are currently giving 5% or above just for the dividend returns. Amway, at the current price, dividend yield for the past 4 quarters at 7+%. Amway's direct selling company categorized in Bursa Malaysia Consumer Products sector, offering health supplements, personal healthcare, household products, skincare and cosmetics. For the past 1 year, its stock's price has been quite stable in the 5 ringgit range, uptrending.
However,
it may change for the worse in the future. So if you want to stay up to date, do follow and subscribe. If you prefer weekly email updates, there's a link in the description below or in bio. Now, you do not want to be holding a dividend stocks that ends up dropping 30% in price for long term. Just because you are not aware of what has happened or what has changed. Now, how likely is this dividend payout can be sustained or even higher going forward? For that, we look at the percentage net margin for the past 4 quarters by dividing the net profit with revenue. In this case, it's 77 divided by 1.5 billion, that is around 5%. Also, we want to analyze net profit growth. Looks like it has doubled compared to the year before, 37 million to 77 million, and in fact far exceeded its net profit 50-ish million before the pandemic. Disclaimer, this is not an investment advice and does not constitute a recommendation to buy the dividend stocks cover, as I do not know your financial needs, circumstances, risk appetite or investment objectives. Then next, we want to look at Amway stocks dividend risk to you. Whether it has too much debt that can make it vulnerable to sudden negative changes in business and economic conditions. For this, we look at total debt minus free cash flow. Ideally, zero. Free cash flow is the cash left over after a company pays for its operating expenses and capital expenditure. For Amway, it is indeed zero as it has zero borrowings. Apollo Food Holdings, at its current price, dividend yield for the past 4 quarters at double-digit 11+%. Apollo is a food company categorized in Bursa Malaysia Consumer Products sector, producing chocolate, confectionery products and cakes. For the past 1 year, its stock's price has skyrocketed from 4 ringgit range to 5 ringgit range. So how likely is this high dividend payout can be sustained or even higher going forward? For that, again, we look at the percentage net margin for the past 4 quarters by dividing net profit with revenue. In this case, 31 million divided by 257 million, and that is about 12% plus. Next, we want to look at its net profit growth. Looks like it has tripled compared to the year before, 9.9 million to 31.6 million, and in fact far exceeded its net profit 14 to 17-ish million before the pandemic. Then next, we want to look at Apollo stocks dividend risk to you. Short-term and long-term debt that exceeds its free cash flow means that it can be impacted by deteriorating business and economic conditions. Again, we look at total borrowings minus free cash flow to check if it equals to zero. For Apollo, it is indeed zero as it has no borrowings and a significantly stronger free cash flow position compared to the year before. Of course, this may improve or worsen in the future, so if you want to be fully aware of future changes, do follow and subscribe. If you prefer weekly email update, there's a link in the description below or in bio. Question asked by leaving your comments below. Here's your next high dividend stocks clip to watch. Also check out more of these global investment strategy videos updated monthly only for CF Liu channel insider members.